All right. Looks like we have everyone here. Good afternoon, everyone. This hearing is being live streamed on OTA's YouTube channel. This is the Office of Tax Appeals hearing for Bongos, Inc. Hold on, I'm being told to wait for a moment. Oh, sorry, I could go ahead. Thank you. This is the Office of Tax Appeals hearing for the appeal of Bongos, Inc. I'm going to explain a few logistical things about how this electronic hearing will work. And after that, we will officially go on the record. And then once we're on the record, I will ask each of the participants to identify themselves. If at any time anyone has any difficulty hearing someone speak or is having technical problems, please, with the video conferencing, please speak up and let us know. To reduce background noise, we suggest muting yourself when you are not speaking. That's everyone is currently doing, thank you. But please remember to unmute yourself when it is your turn to speak. There's an icon of a microphone on the bottom of your screen, and that is how you unmute yourself. Also, just a reminder to please silence your cell phones if you haven't already, so that we won't be interrupted by a phone ringing. Please remember that, as I mentioned, today's proceedings are being live streamed to the public on YouTube, so any information is publicly viewable. Therefore, please be careful not to share any confidential documents on your screen or share any confidential information, such as home addresses or social security numbers. Also present is our stenographer, Ms. Alonso, who is reporting this hearing verbatim. To ensure we have an accurate record, we ask that everyone speaks one at a time and does not speak over each other. And please speak clearly and loudly. When needed, Ms. Alonso may stop the hearing process and ask for clarification. After the hearing, the OTA will produce the official hearing transcript, which will be available on OTA's website. Now, if everyone is ready, we will go on the record. Ms. Alonso, are you ready to proceed?
Judge Brown?
Yes. Yes.
Hi, I have one thing I wanted to cover before we went on the record. In preparation for today's hearing, we noticed that there was an error in the calculation of the 40% penalty. The 40% penalty is almost $5,909, and it should be reduced, we estimate, by about $690 down to $5,220. So we haven't had the chance to do the re-audit yet. So obviously, we'd like to be able to do the re-audit post-hearing. We'll cover this during our presentation, but I just wanted to bring it up before we went on the record that
I will
recommend reducing it.
I will probably ask you to repeat that on the record so that we have a clear record of all of that. Thank you.
That's great. Thank you.
All right, then if everyone is ready, we will go on the record. All right, and we are on the record for the appeal of Bongos, Inc. This is OTA case number 240917431. Today is Thursday, March 12th, and it is approximately 12:59 p.m. We are holding this hearing electronically over Zoom with the agreement of all parties. I will start by asking each of the participants to please state their names for the record, starting with CDTFA's representatives.
Nalan Samaravickrama, hearing representative for CDTFA.
Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
Good afternoon. This is Christopher Brooks, attorney for CDTFA.
Thank you. And I will ask appellant's representative to identify herself as well.
This is Farhana Hussain. I am from Bongos.
Thank you. My name is Suzanne Brown, and I am the lead administrative law judge, or ALJ, for this case. My co-panelists today are administrative law judges Josh Aldrich and Natasha Ralston. Although I am the lead for purposes of conducting the hearing today, all three panel members are co-equal decision makers in this process and are free to ask questions or otherwise speak up at any time. This hearing is before the Office of Tax Appeals, which we refer to as OTA. OTA is not a court, but is an independent appeals body. OTA is staffed by tax experts and is independent from the state's tax agencies, including independent from CDTFA. Because OTA is a separate agency from CDTFA, arguments and evidence that were previously presented to CDTFA are not necessarily part of the record before OTA unless those arguments and evidence have been submitted or presented to OTA. OTA's written opinion for this appeal will be based upon the briefs the parties have submitted to OTA, the exhibits that will be admitted into evidence, and the arguments presented at the hearing. As a reminder, the panel does not engage in what's called ex parte communications, meaning that the panel does not speak to one party without the other party present. We had a pre-hearing conference on this matter in February, and I issued pre-hearing conference minutes and orders. I'm just going to briefly revisit and summarize some of the things that we talked about during the pre-hearing conference before we proceed with the presentations of the parties. First, I want to just confirm the hearing issues. And as I put in the pre-hearing conference minutes and orders, there are 3 issues. The first one is whether adjustments are warranted to the measure of unreported taxable sales. The second one is whether the 40% penalty under Revenue and Taxation Code Section 6597 is warranted. And the third issue is whether appellant is entitled to interest relief pursuant to Revenue and Taxation Code Section 6593.5. I want to confirm the issues, that's everyone's understanding of the issues. There's a couple things that in particular, I want to clarify about issue 2. CDTFA raised before we went on the record that they want to clarify the penalty amount. I also realized I should clarify that the penalty is only, my understanding, for 2 quarters of the liability period. First, I'll confirm that with CDTFA. I should have put it in my minutes and orders, although I think we discussed it at the pre-hearing conference, that it's only for the penalty under 6597 is only for the 3rd quarter of 2019 and the 4th quarter of 2021. Is that correct, CDTFA?
This is Jason Parker. That is correct.
Okay. And then, Mr. Parker, you had raised before we went on the record that you wanted to clarify that the amount is going to be recalculated.
That is correct. So we noticed an error in the calculation. They calculated it on the estimated taxable sales based on the credit card ratio using the sales tax reimbursement amounts. We estimate the penalty amount will go down from almost $5,909 down to approximately $5,220. So we don't have the exact amounts since we haven't put it into our system yet, and we will perform a re-audit after this hearing. So obviously we will want to keep the record open so we can file that.
Okay. Thank you for clarifying that. I then want to turn to appellant's representative and say, I just want to confirm that appellant understands what the issues are, that the first issue is about the measure of unreported taxable sales. The second issue is about this penalty. And the third issue is interest relief.
Yes,
Mrs.
I
Hossain? Okay. And I'll just also confirm that appellant received the minutes and orders that I issued that summarized these issues that we talked about at the pre-hearing conference, correct?
That's right.
Okay, thank you. Also, we discussed at the pre-hearing conference that I asked you to look at the wording of the penalty just so you understood what it was and what we were talking about. And you're nodding your head, so
Yeah,
okay.
I did.
So I understand. So I also just wanted to make sure you understood that this penalty is not a fraud penalty. So you don't need to establish anything about that you didn't that appellant didn't intend to underpay tax, for example. That's not part of what the analysis is that we're looking at for the penalty or for the main issue, the measure of unreported taxable sales.
Yes, I got it.
Okay? You understand? Okay. Then if no one has any questions about the issues, I guess I will say CDTFA, I'll just confirm that I've correctly summarized the issues at this point to your understanding.
This is not in summary. Yes, Judge.
Okay, thank you very much. Then if no one has any questions about the issues, I'm going to move on to talking about the exhibits. CDTFA timely submitted proposed exhibits A through J. We had exhibits A through I at the time of the pre-hearing conference, and then CDTFA submitted exhibit J based on our discussions during the pre-hearing conference. And my office received it on February 20th. And the deadline to submit exhibits was February 25th, so it was timely submitted. I also set a deadline to object to admission of any exhibits. That deadline was March 5th, but OTA didn't receive any objection. So I'll just confirm with appellant that appellant received CDTFA's exhibits and is not raising any objection to those exhibits being admitted. Is that correct?
That's right. I don't have any objections on Exhibit J.
Thank you. Or the other exhibits that we previously discussed at the pre-hearing conference, correct?
That's correct.
Okay, thank you. So if there's no objection, I will admit CDTFA's exhibits A through J.
Okay.
Okay. Now, appellant submitted briefs to OTA, which are part of the record, and the panel will consider appellant's arguments in those briefs. We did not receive any exhibits from appellant directly, although documents that the appellant submitted to CDTFA are part of the exhibits that I just admitted, like emails and a request for relief of interest and penalty. So those are in the record. And I will emphasize that although appellant didn't submit its own exhibits, appellant can rely on CDTFA's exhibits that have just been admitted, including all the documents that Mrs. Hossain, that you submitted previously in your emails that are part of the record now. So I don't have any exhibits from appellant to admit.
That's right.
Right. Okay. Then, since I've covered the exhibits, I'm going to move on to talking about whether we'll have witness testimony today. We discussed at the pre-hearing conference that CDTFA is not presenting any witness testimony. CDTFA is just going to be making arguments. We did also discuss, Mrs. Hossain, whether you would be testifying as a witness today. And I think you said I listed you as a witness, and you were going to consider it whether you're going to be testifying or just making arguments. If you wish to have your factual statements considered as evidence, then I will swear you in, and you can testify as well as making your arguments. Are you going to be testifying today?
Yes.
Okay, very good. And CDTFA did not raise any objection to that previously. All right. So I'm just going to go over the time frame for our hearing today. And that will be after I swear in the witness, then appellant's presentation, we had a time estimate of about 20 minutes. Is that still correct? Yes, okay. And then,
that's
yes,
right.
thank
Yes.
you, thank you. And then CDTFA indicated that its presentation will take about 30 minutes. Is that still correct?
Yes, Judge.
Okay. And then after each party's presentation, the panel may have questions. Once the panel has asked questions, then I will give appellant an opportunity to present a brief rebuttal of up to 5 minutes or so. That's just to cover anything that has arisen in the hearing that appellant didn't get a chance to present in appellant's initial presentation. And if at some point anyone needs a break for any reason, just, please speak up. Right now I'm going to pause and say, does anyone have any questions or anything that you want to raise that we haven't covered before I swear in the witness and begin with the presentations? I will note, Mr. Samawikrama, when you were speaking earlier, you sounded a little bit muffled, perhaps. Yeah, let's just, I may speak up if we can't, if your mic needs further adjusting. All right, if no one has anything to raise, then I will say that I will swear in the witness, and then we can proceed with appellant's presentation and testimony. Mrs. Hossain, if you could raise your right hand. Do you swear or affirm that the testimony you are about to give will be the truth, the whole truth, and nothing but the truth?
I swear.
Thank you. You can begin with your presentation. You have 20 minutes.
Okay, thank you so much. As we have discussed that we will be talking about 3 points today, I'm gonna start from penalty. So for the California Revenue and Taxation Code, we have 6597. I was reviewing the code as judge was requested, and also reviewing the Excel. So according to the Excel Schedule 12B, yes, we were talking about 2 quarters based on CDTFA, quarter Q319, and quarter, I think the last one, for Q421. What I did in the calculations, I see from the column S, the credit card sales ratio, Q319 is way off. It's really off. It's the percentage is showing 35,000.
Can I interrupt? Which page in particular are you referring to? You said schedules, but sorry, go ahead.
I don't have the page number. I opened up the CDTFA workbook, and workbook has 12B.
Okay, just 12. Okay, 12B. Thank you. Go ahead.
That's right. Yeah. So for third quarter 19, I see the percentage is way high. Everything else is within 100 and 150 ranges. So if I exclude that line because it's way high, I'm going to come back to it later. If I add the 11 quarters, the remaining 11 quarters, the percentage I'm getting 99.91. The reason some quarters are higher and the reasons are some quarter lower, as I discussed with the auditor before, that in some quarters we were paying more. And when we are realizing that in the second quarter or the following quarter, we were paying less. But if you total that out, auditor accepted that. He understands that this is our first audit, we were doing it, and he advised that I should not do that going forward. So for that reason, Q421 is not a flag here. The only flag I'm seeing, Q319. So the code 6597E, I was reading, if the person's failure to make a timely remittance occurred only once over a 3-year period, or once during the period in which the person was engaged in a business, whichever time period is shorter, it should be waived. Since we are having the audit for 3 years, and for the 11 quarters, the total is matching. For 1 quarter problem, sure, this is something that I missed. I was checking CDTA website when I was filing, and I was going all the payments that I was making, and it didn't make sense to me why U319 is off. It is way off. I believe this was overlooked by me and I missed paying. But every other quarter, if you check, it's very reasonable numbers. If one quarter is low, the other quarter is high, but the total average is 99.91%. So the analyze or the comments we have in the Excel, I believe it should be done in more depth and thinking about different perspective as well. So for that reason, it's not a repetitive one, and it doesn't show a pattern that we underpaid. For that reason, I think 40% penalty would not be appropriate. Now I'm falling to the next point. I'm going to talk about the interest relief, which I have 6593.5. I was checking CDTA website to understand more about the law and how it works. I would like to add it's on the file somewhere because it's 500 pages. I had been through all the pages, but it has a lot of repetitive information in there. So somewhere in there, auditor asked me more time. So there was a delay from the CDTFA. In August 2022, he asked for an extension and I signed it, and that was till 2023. He asked for January 2023. For the interest, there is a MAMA order. There was issues that we were having. And in October and November 2023, when we were talking about MAMA order, and I was trying to explain why it is different, CDTA asked for more information. TFA asked me to match MAMA order with POS system. So what I did, I opened up each and every receipts that we are getting from our customers and going through each items. The item is twice or three times. And then the third party has a markup, and the markup is not same always. Some markups are more, some were having discounts, some were specials. So by that, I did the math, and then I showed it to CDTFA how it matches. And every transaction was matching with the POS system time and the third water party time. The reason we have MAMA order because we're moving from one system to another system, and we haven't integrated our third-party orders to our PO system yet. So anybody is ordering in third-party website, Uber Eats, DoorDash, or Grubhubs, somebody has to prepare the order in the kitchen. So we are just keying in our POS system so somebody can prepare the order and then we can deliver it. That was the purpose. And we showed how it matches. And that was asked to us October and November 2023. So audit was going. They were asking me questions. I was providing them evidences. So it was not really delaying for us. And anytime they were asking for any records, there was a Zoom call. There are vendors' invoices. We have CPA to prepare tax returns, POS system reports. Anything auditor was asking, I was providing in a timely manner. There wasn't any delay. There was nothing that I was giving any hard time to the auditor. He was very nice to me as well. So I believe our POS system records and reports are largely consistent, and we were very cooperative and providing all the documentation, and audit analysis and additional request was taking longer time. So we should be relieved from interest. Now, if I'm coming back to the point number one, that's the main point we are here today. So if I'm talking back about our restaurant, it's a small family-run restaurant. My mom opened up the restaurant. She's the chef over there. And we're two sisters. We both are helping my mom. My dad is there. My husband and my sister's husband is also there. We have family friends. We have Kaiser Permanente specialist doctors. They are our friends. In the Bay Area, we have friends. And they're also helping whenever it's needed because they all love my mom's food and they would like to see the restaurant success. We were going through a very hard time during COVID time. It was difficult, very difficult for us to survive, especially when we're seeing all the restaurants are closing down. But with very minimal labor, we were trying to survive. So the 90% grade cut ratio guideline that was based on Baker-Tilly's wage analysis, it was in Schedule 12A4. Our restaurant doesn't really fit into any standard restaurant model. We believe we have a very unique restaurant. None of us ever had any restaurant experience before. I remember when we first started our soft opening, people are lining up outside, and I was so nervous. I was in the kitchen. There are so many tickets were coming, and I don't know where to start from. So as time goes, we learned how to run the business and how we can evolve our systems over time. We were not perfect. Now we are pretty stable situation, but that moment we are shopping for different POS system. We are trying to figure out which one is cheaper for us, reasonable, and also the data we want to get, it's there. I would like to mention about Q4 19, Q4 20, and Q3 21. We overpaid our taxes. So we requested for refund that is in Schedule A in the Excel, and that refund was denied because audit was depending on projected sales calculations. And there is a voided transaction. So voided transaction, I think it has, let me go there. Yes, it's 12A3B. It's saying we have 20% voided transactions. The 20% voided transaction is basically coming from the mom orders. So those are not really voided. Those are actual transactions. We're voiding in POS system to make sure we don't have the duplicacy in there. And normally our voided transactions may be 1 to 2%. We cannot avoid that. We have the no cash policy in our system, in our restaurant. The reason is it's a family business, and whoever at the front, we don't want to distrust anybody. So if we have everything credit card process, there is no question asked to anybody. But definitely it's not 100% accurate. Anything can happen. So I was saying maybe 1 to 2% are voided and maybe misplaced that we are not getting in our gross sales. And when we are filing our tax returns, when we are reporting the gross sales, that is the net of that bad debts. There was an undercover transaction happened. That's the email I sent to you. That should not be presented because, first of all, it happened outside of the audit period. And the second reason is it's a single isolated transaction, and the transaction is very small. We are not denying it didn't happen. Might have happened. When auditor was asking for us informations, we have provided all the informations, all the data for that date. If we're intentionally were doing something and if I knew, I might have just asked auditor that or finding excuses not to do that. We haven't done that. We didn't even know that it happened. And that is the main reason we are trying. It's a no cash policy, so we can minimize that procedure. And I would like to strongly say here that single one transaction cannot definitely define the 3 years of $1 million sales that we were having in the restaurant. And as CDTFA already mentioned, there is an error. They found it now. So I was just thinking, if I'm not coming to this point, I don't know, maybe we have paid that amount. And there are another possible error I found in Excel. That's not a material error, but it is there. It's on Schedule 12 in the comment section. I believe it's a typo from the data entry error. Instead of, let me just go there. Instead of they should be talking about Q4 21, they were saying Q4 19. But I guess that's a typing error from the data entry. So overall, my conclusion is our restaurant is a very unique business model. We are running as a family. We are creating our own menus. This is the only Bengali restaurant we have in the Bay Area. We bring fish from my country. It takes long time to come here, but people are craving for that fish. That's a very staple fish in our country. And people are coming to our restaurant from different states to eat the food. And the POS system records, it's reliable and consistent because we put a lot of time and effort to make sure we can process everything systematically. The voided transaction is very minimal, what happened. And I have explained several times before that 1 to 2% can happen. We cannot avoid that. But most of the cases, I can say 99%, they are accurate and we can rely on our POS system. The overpaid quarters, they were excluded. When they were doing, CDTFA was doing the calculations. The quarters I mentioned, there are 3 quarters, 4Q19, Q420, and Q321. They were excluded when CDTFA was calculating their percentages in most cases. And I believe they should be included. If we overpaid, that should be included as well. As I just proved a few minutes back, just because we overpaid, we paid less in Q421. So Q421 doesn't have anything that we paid less. So for the penalty section, that is already excluded. I think that is all I have. Thank you. I don't know if it's 20 minutes or more than that.
Okay, thank you very much. We may have questions for you now, and we also may have questions for you after we hear CDTFA's presentation. Let me start with a question that I mentioned during the pre-hearing conference and put into the pre-hearing conference order. You know that I'm curious about how did your customers know about the no cash policy?
The customers we have in our restaurant, they're all repeat customers. We all know them. It's a small business. We have very small Bengali community. It's definitely for them only. Other people are rarely coming to our restaurants. So by word of mouth, and whenever they're coming, my mom is always there. Our family, other members are there. So they're always explaining that we are not taking cash. And most of the time, they don't even offer cash. They like to pay by credit card.
So it's just by word of mouth?
It's just by word of mouth. We have some signs before in printed out and written somewhere. When the restaurant gets busy, it's easier for them. But I tried to find some evidence from the Yelp review or different pictures. There wasn't anything I found or that I can significantly show you that it's the no cash policy over there.
Okay. All right, thank you. Oh, I realized before I turn to my co-panelists, I will ask if CDTFA has any questions for the witness.
This is Alan Samaravickrama. We don't have any questions for the witness.
Okay, thank you. Then I will turn to my co-panelists. Judge Ralston, do you have any questions at this time?
Yes, this is Judge Ralston. Just a couple of quick questions. You said that the returns were prepared by CPA. Is that just the income tax returns, or does that include the sales and use tax returns?
Income tax returns. Sales and use tax returns are prepared by me.
Okay. And with regard to the no cash policy, is that something that when exactly was that implemented? Since you opened or at some time later?
No, it's not since we opened. So when we opened, our restaurant was using ShopKeep, and ShopKeep reports they have some cash transactions in there. Those are showing on the report. And later, when we were seeing the cash is having a problematic thing for us, then we came up with the plan that there is no cash policy in the restaurant because we were having some arguments between family members and we didn't want that.
Okay, thank you.
You're welcome.
Thank you. And then I will ask Judge Aldrich, do you have any questions at this time?
Hi, this is Judge Aldrich. I do have a couple of questions. So it sounds like the uniqueness of the restaurant is the fact that it's Bengali and that it's family run. Are there any other areas where you attribute it to being unique?
I would say when we were creating our menus for the restaurant, there wasn't any reference that we can look for it. So it's more like we were guessing how, when we are cooking something, what is the material cost, how long it's taking. So coming up with the menu that was unique. Also, what should be for appetizers, main course, or desserts, that's something unique. We have seen in other states, they copied our menus and came up with the same thing because they were seeing that that item is popular, that item is running. So, any other uniqueness? My mom is cooking. She's the chef over there. That's the only reason we wanted to open the restaurant because I heard if you have hire a chef, that's a huge problem. That is a huge conflict happens in restaurants. But she's the owner too. So if she is the owner and she is in the restaurant, then she will be cooking because she's doing it for herself.
Okay. As a follow-up, if I enter the restaurant, will I be greeted by a hostess? Is it where I purchase at the counter and then get a number and wait for my order to arrive and they bring it to me? So like, is it fast casual? Is it fine dining? Is it just casual? How would you describe that experience for a customer?
I would say it's a casual one, definitely not fine dining. Yes, there is a entrance area. Most of the time people are not there. They're all working in the kitchen because we don't have somebody to stay in the front. So we have a bell system. So anybody enters in the kitchen, there is a bell rings, and then somebody comes from the kitchen and greet that person. And if somebody he wants to dine in or it's a to go, now it's mostly to go. Before COVID, the scenario was different. And if there is any third party order, they provide that. And yes, there is a number. We have, I think, about 28 to 30 sitting space inside. Outside, people are not sitting there anymore, but we have some spaces. We give the number. Then we don't get them a number. Then we ask them to sit. They sit there first, and then we bring the menu and give them the number, and we process it.
Okay. And at the end of the meal is when you would typically collect payment for dine-in?
That's right.
And it's sort of like there are designated waiters, but maybe not all of the time, depending on how busy the kitchen is.
That's right. Yes.
Okay. And were tips typically paid? on dine-in?
I think that depends on the people, but in our culture, they're not very generous about tips all the time. But some people are because they see how hard we are working and they're paying, yes.
Okay. And how are tips typically paid out? Were they paid out at the end of the day,
Um,
end of the shift?
I need to think what they do. Yes, that's paid out end of the shift. When they're closing, then we calculate the tips and then it's paid out.
Okay. And what form of payment was that?
If we receive the tips in cash, then it's paid by cash. Otherwise, it will be going to their paycheck.
Okay. And so going back to the point of sale systems, my understanding is that there's 3 different point of sale systems that the restaurant was using during the liability period. Currently, the restaurant's using Toast, but prior to that, it used ShopKeep from 1 quarter 2019 through 4 quarter 2020, and then Touch Bistro 4 quarter 2020 through 4 quarter 2021. Does that sound correct?
That sounds right. Yes.
Okay, and I understand with point of sale systems that there's often a software component, but could you describe the hardware that comes with each of those systems?
Actually, my husband is part of maintaining that, but so far I know overall it's a high level picture. ShopKeep, Toast. For Toast, we have an iPad. It came with that, and it has the hardware, and everything has to be manually entered in there. It also has a keypad as well. I mean, iPad as well, that we can take it to the person when they're sitting, and we can take the order. Touch Bistro and ShopKeep, I believe they were the same.
Okay.
I see what it was happening. It was a monitor kind of thing, and they're typing on the orders in there. And since I do the accounting, I can see in the back office everything came in.
And when you were accepting cash, was there a drawer or something like that where the cash was kept? A kind of lockbox? An envelope? I guess how was it kept when it was kept?
It was a drawer. It
Okay.
was a drawer that had the sections for each dollar amounts.
And did that drawer continue to live at the restaurant through your adoption of Toast?
The drawer was there, but cash was collected every night. Cash was not kept in there, but the drawer is there.
Okay.
And the morning, my mom was taking the cash home, and the morning she was coming and putting the cash in, and that's how we were started ShopKeep with the beginning cash balance.
Okay. But you changed to Touch Bistro and you kept the same drawer in the same spot?
When we changed to Touch Bistro, I don't think we were receiving that much cash, but yes, same drawer, same thing,
And the same
same
is true
policy.
for Toast?
It's true for Toast as well, yes.
Okay. And then for the interest relief, you indicated that you worked well with the department. You provided everything they asked. Did you ever provide bank statements?
That was not asked.
Okay. And then I think those are all my questions. Thank you for your testimony. I'm going to refer it back to Judge Brown.
Thank you.
Thank you. I thought of one more question I'll ask at this point. I have seen multiple places in the evidence about the term mama order, and the witness, you used it as well during your testimony. It's my understanding that's just a phrase that you created for your POS
That's true.
system. Can you explain
That's
it
right.
to the panel? What is it supposed to mean?
Oh, it doesn't mean anything. It's my mom's restaurant, so we just say mama and order. We just had to have some kind of name so we can separate it out. Which one is duplicate?
I'm sorry, which one is what? I didn't
Which
hear
one
that.
is duplicate? Duplicate means which one is coming from the third party, so we can separate that out.
So a mama order is a third party order, like a
That's right.
Grubhub or Uber Eats. That's what you call
That's
a
right.
mama order.
That's right.
So do you have an understanding of why CDTFA found cash sales in the point of sale transactions for 420 through 421? Fourth quarter of 2020 through the fourth quarter of 2021? Do you think
There should be, there can be some cash transaction, but I believe those are very minimal. I don't have the data in front of me right now, but I believe it was only the Shopkeep, it was a little bit higher, but after that, it was going very low. Do you see that in any pages that where I can refer
Yes,
to?
let me see if I can point you to, for example, Schedule 12A-3B.
It dash.
This is a quarterly POS sales
Okay.
report for Touch Bistro.
This is completely mama order, all of them.
But you see where it says cash in column M? It's a total of $1,109.17.
That's right. Yes, I can see that.
So are you saying that that's the minimal amount that you were talking about, or are you saying that that is incorrect, that wasn't cash?
No, I think that is correct. If that is in the system, that is definitely correct, and that is on the reports, and that I believe we paid tax on those as well.
Okay. And then same question for, 1 second. There's one more scheduled like that.
Okay.
Yes, it's schedule. Well, this one might not have as much relevance because this is 12A-3A. It's for the first quarter of 2019 through the fourth quarter of 2020. And my understanding is you changed to the no cash policy sometime in 2020.
That's right. Yeah, I believe so, sometime in 2020. But if any caches are coming, they're recorded in the system. And if that's not coming very often.
Right. Do you have that schedule, the page I was saying, schedule 12A-3A? It's a quarterly POS sales report for Shopkeep. If you look at
which column you're talking? It's
column
12A-3A.
It's schedule 12A-3A, and it's column O that shows the cash sales.
Cash sales, yes.
It totals $19,743.04, but it decreases significantly once you get into 2020.
That's right. Yes.
Okay, so you're not disputing these amounts, that these were cash sales?
No, these are cash sales, and we paid tax for them already. Yeah.
All right. I think those are all of my questions that I have at this time. But as I said, the panel may have more questions after we hear from CDTFA. So at this time, I'm going to say that we are going to, we're concluding appellant's presentation right now, and we will turn to CDTFA. And CDTFA, whenever you are ready, you have 30 minutes to make your presentation.
Thank you, Judge. Pellant, a California corporation, operates a restaurant in Fremont, California. Pellant contracts with third-party food delivery companies and sells food through these online platforms. Pellant also provides catering services through their website. The department audited Pellant's business for the period January 1st, 2019 through December 31st, 2021. During the audit period, Pellant reported total and taxable sale of around $997,000. And this is shown on Exhibit A, page 49. During our presentation, we will explain why the department rejected Pellant's reported taxable sales, why the department used an indirect audit approach, how the department determined Pellant's unreported taxable sales for the audit period, why the department recommended a 40% penalty on unremitted sales tax reimbursement collected, and whether the department recommends relief of interest for any periods. During the audit, Pellant informed the department that they made sales through their point of sale system and use point of sales information to prepare their sales and use tax returns. However, Pellant failed to provide complete POS information necessary to verify the accuracy of the amounts reported on their sales and use tax return for the audit period. In addition, Pellant did not provide complete purchase invoices or purchase journals for the audit period. The department did not accept Pellant's reported taxable sales due to lack of reliable records, inconsistent reported book markups, and high reported rent ratios. The department also determined that Pellant's record was such that sales could not be verified by a direct audit approach. Therefore, the department relied upon an indirect audit approach using Pellant's credit card sales ratio to determine audited taxable sales for the audit period. The department completed 4 verification methods to verify the accuracy of Pellant's reported taxable sales. First, the department reviewed Pellant's federal income tax returns for years 2019 and 2020 and compared the sales reflected on federal income tax return of around $688,000 to the reported total sale for the same period. The department calculated an overall difference of around $55,000, and this calculation is shown on Exhibit A, page 84. The department also compared reported total sales with the cost of goods sold reflected on Pellant's federal income tax returns and calculated reported book markup of around 66% for year 2019 and 145% for year 2020. And the information required to calculate these markups are shown on Exhibit A, page 84. These reported book markups are comparatively low and vary substantially between 2 years. The department expects book markups to exceed the reported markups and to remain relatively consistent from year to year unless there is significant change in pricing, product mix, or operating conditions. Second, the department compared reported total sale of around $633,000 to the rent of around $145,000 reflected on Pelham's federal income tax return and calculated an overall rent ratio of around 23%. And the information required to calculate this rent ratio is shown on Exhibit A, page 84. Based on this high rent ratio, the department determined that the Pelham did not report all their sales on their sales and use tax returns. Based on his experience in audit of similar restaurant in Pelham's area, the department expected to see a lower rent ratio for this restaurant. Third, the department compared the Pelham's recorded sales and collected sales taxes with the amounts reported for the audit period, and this is shown on Exhibit A, pages 68 and 69. Pelham's records reflected around $1.1 million in sales, while only $997,000 in sales was reported, resulting in around $126,000 in unreported sales for the audit period. And this is shown on Exhibit A, pages 68 and 69. The department also determined that the Pelham collected around $105,000 in sales tax, but reported only around $94,000. And this is shown on Exhibit A, pages 68 and 69. Fourth, the department compared the reported total sales to the recorded credit card sales and calculated an overall credit card sales ratio of around 112% for the audit period. And this is shown on Exhibit A, pages 78 and 79. This means that Pelham reported total sales were lower than the total credit card sales for the audit period, indicating that Pelham did not report all credit card sales during the audit period. Therefore, the department considered this is to be an unacceptable credit card sales ratio for this type of restaurant. Pelham was unable to explain the discrepancies identified in the federal income tax return sales information. Differences between recorded and reported sales, low and inconsistent reported book markups, high credit card sales ratios, and elevated rent to sales ratios. Accordingly, the department conducted further investigations by analyzing Pelham's credit card sales ratios, available POS records, and reported sales. Pelham did not provide complete POS information that is necessary to verify the accuracy of reported taxable sales for the audit period. Therefore, the department requested Pelham to maintain complete daily sales records for a period of 2 weeks from Friday, August 5th, 2022 to Thursday, August 18, 2022, and thereafter conducted one-day observation on Friday, August 19, 2022 to verify the completeness of the 2-week sales records. Prior to the observation day, the department made a control purchase on August 18, 2022, which Phelan later voided when they submitted their sales records to the department. And this is shown on Exhibit A, pages 85 through 87. The department also observed that the Phelan refused to accept cash payments during the observation day. This limited the department's ability to determine Phelan's actual credit card sales ratios and credit card tip ratios. As such, the department determined that the recorded taxable sales on Phelan's PO's records were not reliable, and the department was unable to determine Phelan's credit card sales ratios. Accordingly, the department used Phelan's third-party delivery sales, credit card sales percentage of 90%, recorded credit card tip ratios, and applicable sales tax rates to determine audited taxable sale of around $1.2 million for the audit period. And this is shown on Exhibit A, pages 54 and 78. The department then compared the audited taxable sales to the reported taxable sales to calculate unreported taxable sales for the audit period. And this is shown on Exhibit A, page 54. The department noted credit differences for 3 quarters of the audit period. However, Phelan did not provide any documentary support to substantiate or adjust those credit differences. Finally, the department determined unreported taxable sale of around $218,000 for the audit period, and this is shown on Exhibit A, page 54. The department then compared the unreported taxable sales with the reported taxable sale of around $997,000 to calculate the error rate of around 22% for the audit period. Since Phelan failed to provide their complete POS sales information, the department used the best available information to determine the unreported taxable sales for the audit period. The audit calculations of unreported taxable sales based on the best available information were reasonable. When the department is not satisfied with the accuracy of the sales and use tax return file, it may rely upon any facts contained in the return or upon any information that comes into the department's position to determine if any tax liability exists. A taxpayer shall maintain and make available for examination on request by the department all records necessary to determine the correct tax liability under the sales and use tax laws, and all records necessary for the proper completion of the sales and use tax returns. When a taxpayer challenges a notice of determination, the department has the burden to explain the basis for that deficiency. When the department's explanation appears reasonable, the burden of proof shifts to the taxpayer to explain why the department asserted deficiency is not valid. Phelan does not agree with the audit findings. Phelan contends that they had no cash transaction at the restaurant during the audit period, and therefore that the 90% credit card sales ratio is not reasonable. In addition, Phelan contends that the department did not take into account voided transaction on their POS system and provided in support a summary of alleged voided transaction totaling around $10,000 for the period November 2020 through December 2020 based on their POS records during appeal process. Phelan asserts that these alleged transactions represented third-party delivery orders that customers either canceled or did not pick up, or items that were out of stock. The department's position is that Phelan's contention that they had no cash transaction is not credible. Phelan's own POS records and the department's controlled cash purchase on Thursday, August 18, 2022 show that the Phelan accepted cash, which they later voided on the sales receipt submitted to the department. With respect to the alleged voided transaction, the department determined Phelan failed to reconcile alleged voided transaction in their POS system, totaling around $11,000, with voided third-party sales totaling $8,400, leaving around $23,000 in voided sales that were not identified as third-party sales for the period November 2020 through December 2020. The department further contends that the voided sales are not relevant to the audit because it relies solely on Phelan's recorded credit card sales from their POS records, which do not include voided sales to calculate audited taxable sales for the audit period. For the first time, Phelan objects to the department's use of controlled cash purchase to verify the completeness of Phelan's sales information. Phelan did not provide complete sales information for the department to verify the accuracy of sales reported for the audit period. Phelan's own federal income tax returns, sales reports, and credit card sales demonstrate that the Phelan failed to report their sales accurately. Although Phelan was able to provide the current sales record for 2 weeks at the time of audit fieldwork, and therefore the department performed a controlled cash purchase solely to verify the completeness of the 2-week sales information and to assess the reliability of Phelan's POS information for the audit period. Accordingly, the department rejected Phelan's objection to the use of the controlled cash purchase. The department recommends 40% penalty for third quarter 2019 and fourth quarter 2021. The department compared sales tax reimbursement collected of around $9,600 for third quarter 2019 and $11,000 for fourth quarter 2021 with Phelan's reported sales tax reimbursement collected of $300 for third quarter 2019 and $7,200 for fourth quarter 2021, resulting in difference of around $9,300 for third quarter 2019 and $3,700 for fourth quarter 2021. To date, Phelan failed to explain the reasons for not reporting the sales tax collected for this period. The department further found that the Phelan's president is an experienced business person who has been involved in the business in 2016. The department also found that the Phelan's president demonstrated substantial knowledge in operating and navigating through Pelham's POS system and personally prepared Pelham's sales and use tax return for the audit period. According to the sales receipt for the department's control cash purchase at Pelham's business on August 18, 2022, Pelham added sales tax reimbursement to the selling price of food as a separate line item. And this is shown on Exhibit A, page 87. The department notes that the Pelham voided this cash transaction when it submitted their sales receipt to the department. Pelham's POS records also show amount of taxable sales Pelham made and the sales tax reimbursement they collected. The department finds that the foregoing establish that the Pelham knowingly collected sales tax reimbursement from customers that they failed to timely remit to the department for the audit period. In addition, the unrepeated sales tax reimbursement of $9,300 for third quarter 2019 and $3,700 for fourth quarter 2021 averages more than $1,000 per month and exceeds 5% of Pelham's reported sales tax reimbursement collected of around $300 for third quarter 2019 and $7,200 for fourth quarter 2021, the two thresholds required by Revenue and Taxation Code Section 6597 to impose the 40% penalty for these two periods. Accordingly, the department finds that the 40% penalty was properly imposed. Finally, the Pelham requests relief from interest for audit period due to alleged unreasonable delays in processing the audit. The department conducted an analysis of this case, including the time spent during the audit, appeal, and settlement process, and this is on Exhibit J. Based on this review, the department recommends that no interest relief be granted. However, the department granted automatic interest relief for the COVID-19 pandemic impacted months of March 2020 through June 2020. Based on the foregoing, the department determined the unreported taxable sales based on the best available information. The evidence shows that audit produced reasonable results. Parent has not provided any reasonable documentation or evidence to support adjustment to the audit finding. Therefore, the department request appeal be denied. This concludes our presentation. We are available to answer any questions the panel may have. Thank you.
Thank you very much, Mr. Samara Wikrema. Let me start with a question that about some wording that I found and that I hear in your argument as well, that CDTFA is pointing to, I understand, of course, the undercover cash purchase that was voided prior to the observation day as support for not relying on appellant's records. But it's my understanding that CDTFA is also pointing to the refusal of the business to accept cash payments on the day of the observation test. I understand the argument that CDTFA is saying because appellant didn't accept cash payment on the day of the observation test, CDTFA couldn't determine a credit card ratio for that day. But my question is, doesn't the refusal to accept the cash payment also support appellant's position that it was a cashless business at that point, that it was not accepting cash transactions?
This is Nalan Samariko. When the auditor went to do the controlled purchases the day before the observation, Pillen accepted cash.
I understand that was the day
Yeah.
before.
Right.
So on the day of the observation test, I saw, my understanding is appellant refused to accept a cash purchase. Now, is it CDTFA's position that that refusal was not reflective of a no cash policy because appellant knew that it was the observation test day?
The Judge Brown, the day before, when the auditor went to the business and paid cash, they accepted, and during the observation, when the customers try to pay cash, they refuse to accept. So the question is, do they have different policies on different days? And that one we don't know whether they have different policies on different days.
Judge Brown, I'd just like to add that,
Yes.
the observation test is to determine their sales on a normal type of business day. And so by having them not have this refusal to accept cash, not on the observation test day, and where we could go in and pay with cash, and we know that there were other transactions with cash throughout the period. We know there were lots of voided transactions. And then on the observation test day, they refused to accept cash, which kind of doesn't allow us to really to perform a true observation test of what the business was doing. That is why we did not accept the no cash policy.
But I guess my question is, does the refusal to accept the cash purchase on the observation day support appellant's position that it was a cashless operation by that point?
The Judge Brown, the taxpayer's own record for 3 quarters support 85% credit card ratio. So, but we only use 90%. So if you check give me one moment to pull the exact page number.
Sure.
And Judge Brown, I'll just add one other thing. The appellant obviously has no sign that they don't accept cash. There's no indication that they don't accept cash. They do get credit card tips, which they indicated were paid out on paychecks, but they have not provided any evidence of that. Not that I'm aware of any time that we asked for that, but generally speaking, credit card tips are paid out the same day in cash. And then also that, we have we looked at Yelp. We didn't provide any information from Yelp, but there's no indication in any review that they will not accept cash. And so there's no indication ever anywhere on a website or any posting or anything that they had this no cash policy except the date of our observation test.
Okay, thank you. I will turn to my co-panelists and ask if they have any questions. Judge Ralston, do you have any questions at this time?
No questions, thank you.
Okay. Judge Aldrich, do you have any questions at this time?
I have a quick question. So with respect to the credit card sales ratio, what, if any, considerations were made to account for COVID-19? I guess this liability period kind of spans the COVID period of so 2019, there isn't really a lockdown or anything, but towards 2021, it does seem like there was a push towards cashless systems and things like that.
Judge Aldrich, for 2020, the fourth quarter, we accepted the reported sales. And for your question, did we make a special consideration for the second quarter 2020 when we are using the 90%? We did not, because when you analyze Pelham's wage information, and based on that estimate that we derived supports the 90% credit card ratio.
Okay. And then with respect to the observation day, my understanding is that typically there'll be multiple observation days first when an observation day is employed. Why is it sufficient to have one observation day in this particular appeal?
Judge Aldrich, the department policy is using 3 days if you are using the observation to estimate additional sales or estimate sales, but for this audit, the department use a 1-day observation. The only objective of that 1-day observation to see whether the 2 weeks information is complete, and so that's the reason the department did not do 3-day observation. The only objective was to verify whether the taxpayer provided information is the reasonable, and the department also did under control purchases before the observation to verify whether the sales were complete.
Thank you. I think that concludes my questions. I'm going to refer it back to Judge Brown. Thank you.
Okay, thank you. I think I don't have any further questions at this time. So that means that we go back to appellant, and appellant will have 5 minutes just to address anything that has arisen in the discussion, in the questioning, or CDTFA's presentation that appellant wants to reply to. You can proceed whenever you're ready, Mrs. Hussain.
Thank you so much. I had been trying to write a lot from the beginning. So for a cost of goods sold, yeah, as I mentioned, the cost of goods sold, there is one item, is a fish item that's coming actually from Bangladesh. One fish costs $100. Our cost of goods sold is high, definitely. And during COVID time, what happened? When we order the supplies from, we order from New York. They are coming from New York, and then we order at least 3 times in a year, sometimes 2. I think during COVID time we did 2 because it was less sales. We order a lot, and we keep it as a storage, as an inventory that will be used throughout the year. And we were having loss at that time, and I was putting my own money to the business so we can cover the period and we can survive that time. Our cost of goods sold has high because we already have the expenses of buying all the items. They're in there, but we're not getting revenue that much. That's one thing. Rent ratio, rent is higher over there. Our restaurant is very small, especially if you go in the kitchen and the storage area, we don't really have a lot of space. So we do have storage outside. And I was adding that to the rent as well. And I already explained the 112% that CDTFA was talking about for 2 quarters. It's actually 1 quarter, and I accept that we haven't paid that 1 quarter. I see it's missing in CDTFA website. But other quarters are working okay. And if you just calculate that, it's not 112%. That's already explained on my penalty section. Anything else? And I heard a couple of times CDTFA said that we haven't provided the actual information. That is something I don't recall at the moment, because anytime they were asking questions, any documents, any POSs, because we were actually having a Zoom call, and the auditor downloaded every single reports from the 3 systems he needed. We downloaded together, and then I provided all the documents to him right then after our call. And after every time, he was asking for vendors invoices for the fixed asset and everything to check if you're paying vendor sales tax. And he confirmed in the report that we did, and we had been providing reports. We didn't have the PDF copy of our tax returns, our tax CPA. Our CPA, he's sending us only paper copies where we are keeping one and filing one. But we requested the PDF copy we can send it out to CDTFA. And also for the mama order, it was so past the time, because we were asked to provide mama order details in October and November 2023, and I was looking for data in 19, sorry, or 20. So I had to call them and get access to the data, and sometimes they provided the list. And when I provided the report to the CDTFA, I calculated all the calculation. I explained, and I have a screenshot that where I get the data from, so they can follow my work, that how I did it. I personally, as an accountant, this is what I do in my personal life, so that's a habit. So I did it that way. It was easy for them to understand and follow, I believe. For the observation, yes, we accepted. It was definitely a very one-off, very small amount. I don't even know if they came for many other days and observed. That is no way we can tell. If they're saying they didn't, then yes, we accept they didn't. But most of our customers are very repeated customer, and yes, we accept that we never really have a formal signature. I asked my husband, he was actually in management of all the logistics in the restaurants. I do accounting, my mom is cooking, my sister is sales, something like that. We have our roles. And we were about to buy it, but he was saying everybody already knows it's like nothing to do, but we should have it, but we don't. But sometimes on and off, we have some paper, for example, any special, we print it out and we hang it, and then paper doesn't go well, and then it goes off. I tried myself to figure out if that no cash policy is written anywhere. But as I said, customers were not really willing to pay cash all the time. I don't see that very often in our community, that they're willing to pay cash all the time. Most of the time is credit card ratios, credit card payments, and anything was coming in cash. We were not really focusing on which is cash, which is credit card. It's reported in the system, and we are filing based on the report I'm downloading from the system and processing at the CDTFA website. So I believe our POS system is reliable. So we should not be going even the projections. What CDTFA is doing, they're projecting the whole scenario and guessing, comparing, and coming up with the data, which is we don't agree. Thank you.
Thank you very much. Before we conclude the hearing, I think I need to set up the timeline for when I can expect the information from CDTFA about the re-audit. My understanding is I won't be able to close the record until I get this information from CDTFA. Is that correct, Mr. Parker?
Right, that's correct. It shouldn't take us more than 30 days. We'll try to get it done within the next week or so. We don't think it should be a complicated re-audit adjustment and be able to send that out. So if we have 30 days, we'll do our best to get it done within 7.
Okay, thank you very much. And I just want to check with appellant that you understand that we're going to leave the record open so CDTFA can recalculate the penalty. It's going to be lower. I don't anticipate that there's going to be anything that appellant will need to respond to on this particular point, but I'm just wondering if I should leave the record open to allow appellant to respond to anything that CDTFA submits about this. Well, let me ask first, Ms. Hossain, do you anticipate you're going to want to respond to CDTFA's new calculations, or is that premature for you to know?
I already explained the calculation several times. If you want me to write it down and explain that's related to the penalty, I can reply saying it.
I'll say I don't think I'm not asking you to,
Okay.
but I'll leave the record open just in case. As you
Okay.
heard CDTFA saying, they're saying that the amount they calculated is too high. They're going to it's going to be slightly lower. If for some reason there's anything, we've already heard your argument about why the penalty is incorrect, and I understand that, and that is in the record, and the stenographer will, that will be in the transcript as well. This is just if you're going to have any response to the new reduced, to the calculations of the reduced amount. I will say I'll leave the record open for I don't know, I guess I'll say 30 days after we get this from CDTFA, for you to submit anything. Will that be
Yeah, I
sufficient?
mean that definitely should be sufficient. If you
Okay.
can lower the time as well, but yeah,
That's fine.
I appreciate it.
I can do it. I can say 15 days if that's enough time for you, if you want the record to close sooner.
Okay, yeah, that's right.
Okay.
I can do that.
Okay. So I'll say we're leaving the record open for 30 days for CDTFA to submit a re-audit, and then after CDTFA submits the re-audit, appellant will have 15 days to submit any response, and then we will close the record. And then the judges will meet and decide the case based on the evidence and the arguments and the applicable law, and we will mail both parties our written decision no later than 100 days from the date the record closes, after we receive this additional briefing. If no one has anything further, then I can say that the hearing is now adjourned, and the next hearing will begin shortly in a few minutes. Thank you, everyone, for participating today.
Thank you.
Thank
We are-
you. Thank
We
you.
are concluded.